Welcome. In this video, will the ZBCN coin rally continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we first take a look at the chart, we see that there is an uptrend structure that has worked quite consistently in the past. This trend line represented a structure in which the price reacted upwards with support on every pullback. For a long time, buyers were active, reflecting the positive sentiment in the market. However, with the recent price action, this structure started to weaken, and eventually the price dipped below this trend line, making a significant technical breakout. A trend break can be interpreted as one of the first serious signals of a change in the market's direction. However, this doesn't necessarily mean that a strong decline will begin directly, because some support points below the price may still be in effect. The two purple horizontal lines marked on the chart represent areas that have worked many times in the past, where the price stabilized at these levels and started to rise again. These levels stand out as strong technical supports, and when the price approaches these areas, it may receive a buying reaction again. Especially in such strong support zones, market participants may tend to reopen positions. This could result in increased volume and an upward price reaction. If these support areas, indicated by purple lines, have worked many times in the past and moved the price upwards, the possibility of the same scenario repeating should not be ignored in terms of technical analysis. In such a structure, the price moving towards these support zones can be considered as an opportunity for investors. However, it is critical how the price will react in these areas. If strong buying pressure occurs at these levels and the price signals a return from here, there is a possibility of re-entering the uptrend. Otherwise, if these support levels are also broken, the possibility of a deeper correction may come to the table. To summarize, although the break of the uptrend is a sign of short-term weakness, the two important support levels below the price still look promising. The reaction from these areas will be very effective in determining the future direction of the price. For this reason, it is very important to carefully monitor the price's movements in these areas in order to make healthy decisions. But we should not only look at the trends, but also look at other metrics. Keep watching. Analyzing the chart, we see that the current price action has reached a very critical and remarkable level. This level stands out as a strong resistance zone where the price has paused after gaining upward momentum in the past, even causing pullbacks over time. Especially in technical analysis, such levels, which have been tested and not exceeded before, are of great importance as they are also the points where investors react psychologically. At the moment, the price has touched this resistance level that was set at the previous top, and there is a certain indecision at this point. Resistance zones are usually the places where supply is reconcentrated in the market. More precisely, many investors tend to view such areas as selling opportunities and close their positions. The main reason for this is that the previous price decline in this area has left a mark in the investor's memory. This leads to investors getting nervous and selling when the price reaches the same level again due to the negative experiences of the past. It is precisely because of this psychological dynamic that the price is currently stalled here and struggling to break through this level. However, a deeper look at the details of the chart reveals that the price had previously lingered for a long period of time when it reached this level. This is a very common behavior in technical analysis and is called a consolidation process. That is, the price doesn't find enough buying volume at the resistance zone and moves sideways for a while, followed by a breakout to the upside or downside. The direction of this breakout depends on whether buyers or sellers are dominant. Currently, the price has reached the same area once again. What's different this time, however, is that the price is likely to head towards the previous support levels without lingering too long here. This is because in order to break resistance levels, the price usually needs to pull back a bit and gather strength from below. In this process, traders can rebuy, and the price can gain the necessary momentum to move higher. Support zones come into play at this point. Because they are the levels where the price holds in its downward movement, buying pressure intensifies, and upward moves begin again. There is a rule often emphasized in technical analysis. Old resistances become new support after they are broken. In the current scenario, however, the upside breakout has not yet occurred, and the price is struggling again with this resistance, which coincides with the previous top. In such situations, traders especially look to see if the price is testing this resistance a second or third time with strong support from below. This is because each retest increases the probability of an upside breakout. Resistance is considered to weaken with each touch, and if this breakout occurs, a hard and fast bullish wave may come. The strength of the uptrend after this breakout usually depends on the strength of the orders accumulated at this resistance and the severity of the congestion. It should be noted that the current price level is not only a technically important threshold, but also a psychologically important one. Therefore, the decisions traders make at this level can determine the direction of short and medium-term price movements. If the price loses strength at this level and a downward correction begins, the support zones below are expected to re-engage and hold the price. However, if the price regains strength with one of these supports and heads towards the resistance zone again with an upward momentum, the probability of a breakout will increase considerably this time. To summarize, the price is currently facing an important level that has been tested many times in the past and has worked as a strong resistance. Considering the previous price behavior in this area, a highly likely scenario is that the price will linger here for a while, gather strength, and then try to break through this resistance with a new upside move. If this breakout occurs in a voluminous and decisive manner, it would be technically quite possible for the price to reach higher levels. Looking at the chart as a whole, the influence of the 200-day exponential moving average on price action, a frequently used indicator in technical analysis and a very important indicator for traders in determining the long-term trend direction, is very noticeable. This indicator is often used to determine the general direction of the market, and the price moving above or below this average gives serious clues about the medium to long-term trend. In the current situation, the price approaching this 200 EMA level may have started to signal a possible retest. Since the 200 EMA is a key level in the market followed by both large institutional investors and individual traders, price movements around this average are often of high importance. Selling pressure may have been effective when the price was previously below this level, but now a reorientation towards this level is being observed. This suggests that this could be an area where traders are reassessing and updating their positions. Currently, the price is hovering near this important average, or maybe in a retracement towards it. In such cases, it is quite common market behavior for price to retest the 200 EMA once again, that is, to retest this level. This retest usually has a twofold meaning for traders. On the one hand, it can act as a support and carry the price upwards, but on the other hand, if this level is broken to the downside, it can also trigger a strong wave of selling. However, if the general trend is upwards, that is, a sustained move above the 200 EMA has begun, this average starts to work as a support level. Retest moves are often very valuable as a healthy confirmation of the market's direction. In other words, if the price makes a breakout to the upside and then returns to the level it broke and starts a new wave of buying from there, this is considered a very positive signal in terms of technical analysis. This process is one of the classic technical behaviors where traders look for a confirmed breakout. At the same time, such retests provide a second buying opportunity for traders who wanted to join the upward movement of the price but missed the train at the first breakout. On the other hand, caution should be exercised when the 200 EMA level is tested and broken to the downside, because when this level is broken, there is a possibility of a deeper correction or trend reversal. However, in the current situation, given the overall market structure, volume situation, and previous support resistance behavior, it seems one of the more likely scenarios that the price will return to this average level, find support there, and start a new bullish wave. The 200 EMA will act as support here, so it is necessary to follow it. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.